I don't want to jump ahead in the discussion here, but I do think you raise an important point, which is that our leverage situation across our entire economy in Canada, I think, is underappreciated as a risk in all of this, right? So, you'll hear people talk about, oh, Canada's federal debt is the best in the G7 and all this, and that's just
I hate that
nonsense. And so let me
why
explain
is that?
really
Why?
quickly for the
Yes,
listeners.
please. Yes.
So there's a couple things that are problematic with that comparison. If we just do a direct comparison to the U.S. federal debt levels, yeah, our debt looks much better than the U.S. Now, one of the problems is that in Canada, we offload the spending for healthcare and education to the provinces. We're one of the few countries where the sub-sovereigns bear the cost of two of the biggest expenditures of any budget, right? So that's one thing. So our provinces are highly indebted where the US states are not. So you need to include that. But then the second thing that's not discussed is that when we compare those debt levels, we always compare them on a net basis.
Mm-hmm.
And what that means is the government will say, well, yeah, our debt is X, but we also have all of these assets like Canada Pension Plan on the other side of the ledger. And so if you net out those assets, our net debt's actually much lower. Now, when you tell Canadians that the federal government includes their pension assets as their own government assets and offsets the debt against those, most people are like, well, that doesn't make any sense. Like, if the government got into trouble, are we okay with them taking our pension assets to pay their creditors? Like, I don't think anybody in Canada is. So why are we allowing them to include those, and offset the debt using those assets? It makes no sense. So the right way to measure it is to look at debt on a gross basis and to include not just the federal government, but include the sub-sovereigns, right? The provinces and the US states and whatever, include corporations and include households. And when you aggregate all of those, Canada is over 300% of GDP. Now, for context, the US is about 250. So both quite high, but we're considerably more sensitive in the US. We're really one of only about half a dozen countries in the world that has gross total debt above 300% of GDP. So it is concerning. And one of the things that I talked about, and again, Tom, I'm sorry if I'm going way off script here.
No.
When you think about it from kind of a first principles, it's like, what do governments do when they have too much debt, right? There's really only a handful of options, right? So one is, well, they cut expenditures. So you go through a period of austerity. Governments tighten their belts, they cut spending. Everybody hates that because it's weak economy, job losses. It's all never popular. So you can do that for a little while, but ultimately that's not a permanent solution, I don't think. Secondly, you can grow your economy really rapidly, and so here you would need some sort of like a productivity miracle. So let's say maybe that's going to be AI. Right? It's plausible that we could grow our way out of this indebtedness situation. Plausible, but like I wouldn't, I wouldn't bank on that. The third is you default, right? So you get rid of your debt by just not paying your creditors. Well, that's not going to happen because the federal government always has the ability to print the money and pay their people back. So you're going to get repaid. But the fourth one that's most likely and that always tends to happen is you inflate away the debt. So you keep interest rates artificially low, you let inflation run a little bit hot, and over time you grow the nominal value of the economy faster than your debt burdens by inflation. And so you basically screw your creditors by repaying them in inflated dollars. So it's another way of saying it is you're stealing from old people slowly. People who are on a fixed income, you kind of screw them, and that's how you deal with it. But that's ultimately kind of the end game in all of this, and that's why you and I were talking off air. But like, it's like all roads in this sort of situation lead to debasement, and then you need to ask yourself, well, what do you want to own in those situations?
So what do you want to own, like for you and your family? Like I don't know if you want to take this from like how you advise people, or for you and your family, how are you thinking this through?
Well, I mean, the things that the asset classes that tend to do well in periods of debasement, and look, there's always a kind of an underlying level of debasement, right? So we know that
Sure.
like you're
Yeah.
debasing the currency at some
Mhm.
value every year, and
Yeah,
that's why
I'm
you know
slightly
dollar
obsessed with
buys less.
I'm totally obsessed with this. So yes, yeah,
Yeah,
yeah.
I know you're. This is
You
right up
say it very
your
politely.
alley.
I say it very differently. I say we're being stolen from at all times at about
Yep,
8% compounded annually for the basically our entire lives. And you have to beat
yep,
8% at a minimum to try to stay ahead for your, for your purchasing power of your family and your savings, your net worth. You have to
yep.
beat that. But I think I'm a broken record
No,
on
no,
that
no.
kind
I
of stuff.
think
So I
that's
just want
exactly right. Yeah, no, I think that's exactly right. And so, you know, that's kind of the long-term trend. It's some number. You can debate whether it's
sure,
6, 8,
sure.
10, whatever,
Yeah.
but there's
Yeah.
some level of kind of baseline debasement. But then you get through these periods where it can accelerate, right? Or decelerate. So that the
Mhm.
underlying number can fluctuate over time. And I think we're in a period where there's concern that that sort of, you know, debasement level is going to have to accelerate because we're coming to a situation where, you know, global bond markets are starting to, well, up until the last month or so, we're acting a little unruly, and there's, you know, enormous deficits that have to be financed around the world, including, it sounds like we're going to find out tomorrow, but it sounds like in Canada we're going to see a monster deficit. So, you know, what tends to do well in those periods where the debasement trend is
Yeah.
accelerating
Yeah.
would be, you know, any sort of real assets that are relatively scarce. So it can be stocks, right? As long as
Mhm.
they're, you know, have earnings that are not discounted way in the future. So like tech tends to not do well in those situations. But anything that's sort of a real tangible assets on the balance sheet tends to do much better, and especially a skew towards things like emerging markets. Canada stocks tend to do well, believe it or not. We've got a lot of real asset exposure, but then all the normal things, the gold, the bitcoins, which I've talked in the past. Historically, I've never been a huge fan of Bitcoin, but I can't argue with the trend. It certainly is your friend,
I'm
and
just
I've been
so
wrong on
happy
that
to
one.
I'm so happy to hear you say the word. I'm just so happy to hear you say the word. Small
I own
small victory.
some. You know what's funny is I own some only in my kids' RESP, and only
Okay.
because like I try to get them involved in the investment process. So here's a funny story.
Next
So
time I
when
see
I
you,
set,
I'm going to send you some. I'm going to get you a wallet on your phone and I'm going to send you some. So then when anyone asks me, I'm like, oh yeah, Ben has Bitcoin for sure. I know. I know.
well, I do,
Yeah.
I do. But what's funny is like when we set up their RESPs, I had them kind of involved in the process, and they bought all these things that I would have never bought. But it's because like that's what they knew. So they were buying, like, this is like years ago. They were buying like, well, I like my iPads, well, I'll buy Apple, and I like this, and they bought all
Oh,
of these kind of, and they're like, well, and I keep hearing about Bitcoin. Let's own some Bitcoin. I'm like, okay, sure. And like literally, their RESP portfolio is crushing me
crushing
because
it.
they've been like long all the tech names and long Bitcoin. I'm like, oh, you little turds.
Yeah.
So that was good for them. So I own some via them. But listen, that Bitcoin tends to do well. Precious metals tend to do well.
Mhm.
Yeah, and look, real estate, as long as you're owning the right type of real estate, relatively scarce, right? Cash flowing, you're gonna do well. So, and again, we're talking over the longer term, right? So
Sure.
you can get
Yeah.
hiccups in between, and you're gonna want to watch leverage here and there because you don't want to get carried out. But that's where we're at.